Hello, and I'd like to welcome you all this morning to the SC Launch and Learn with Allen Gillespie, President of Fintrust Capital Advisors, moderated by Bob Quinn, Executive Director of SCRA. Today, we are discussing the coronavirus stimulus package. Before we begin, I'd like to go over two housekeeping items. First of all, if you can hear me, please raise your hand in the webinar controls. Great, thank you, Thomas. Welcome, everyone. Welcome, Michael, Kella, Kevin, thank you so much. Secondly, on the format of today's webinar, we will keep all audience audio muted. So if you have any questions, please feel free to type them into the webinar controls at any time. Bob will then pose these questions to Allen during the second half of our planned webinar. My name is Julia Linton, and I serve as the Operations Manager for the SC Launch Program. Please join me in welcoming Bob Quinn, Executive Director of SCRA, to this webinar as our moderator. Bob, I will hand the mic over to you and let you properly introduce Allen Gillespie, our guest host. Bob?
Thank you, Julia, and good morning, everyone. Thank you for joining us for this webinar. Before I introduce Allen, some other housekeeping elements. You'll notice on your screen 3 attachments. We are providing those for your use. They include a summary of the Paycheck Protection Program, which was developed by one of our resource partners, Practical Growth Partners. We also have the Paycheck Protection Program borrower application, as well as a representative loan application checklist. I will also bring to your attention that on our website, scra.org, we have developed a COVID-19 page, which is chock full of lots of useful information in terms of links to other programs offered throughout the federal government. We also have included some highlights of some of our SC Launch client companies that are participating in addressing this pandemic. So we update that on a regular basis, and I would bring that to your attention. We'll also be posting a recording of this webinar on that page shortly after the conclusion of this program. I'd like to introduce our guest host, Allen Gillespie. Allen, as was alluded, is the president of Fintrust Capital Advisors and also serves as the managing partner for investments at Fintrust. You'll see Allen has extensive 25 plus years of experience in the financial investment industry. He also has served as chairman of the South Carolina Retirement Investment Commission previously and is currently still a member of that board. Good morning, Allen, and thank you for joining us.
Good morning. Thanks for having me.
So let's start with some basic definitions so we can be grounded. Could you briefly describe the definition of the CARES Act, the coronavirus stimulus package, and then what a small business is as defined within the CARES Act?
Sure. So the CARES Act specifically refers to the Coronavirus Aid, Relief, and Economic Security Act. That was the $2 trillion package that Congress passed and that the president signed. The broader stimulus package, however, goes across all aspects of federal government. So I'd hate to say that it's any one item or any one act. It's really the culmination of all those across all the various agencies of the federal government. And I would say they are all extremely active. So this includes things that we're seeing in banking from the Fed, Treasury, SBA, Congress, FDA, Tobacco Control Board. So really, the broader stimulus package is across federal government.
And definition of small business?
Sure, yeah. So small business has a specific reference in the SBA manual. So the CARES Act essentially extends that. It's kind of lengthy, but the easiest way is most businesses that have less than 500 employees are potentially eligible small business. But there are, in essence, sort of 9 categories under existing, and then this kind of expands it. And so broadly speaking, people are saying businesses less than 500, but this does broaden it to include 501c3s, potentially 1099 type employees and self-employed types. The CARES Act essentially expands the reference list that's in the existing SBA legislation.
Great, thank you. So we're going to go into some of the details of specific provisions of the Act, but at a 30,000-foot level, what parts of the CARES Act are most impactful for small business owners?
Obviously, the ones that are getting the most attention are the SBA programs. There are actually 2 different parts under that. One is the economic injury disaster loans, or EIDL loans. EIDLS is kind of the acronym people are using for those, as well as the Paycheck Protection Program. Those are probably getting the most attention. It is a very broad act, however, so there are other features. So depending on kind of the condition of your business, the type of business, the industry of your business, there are a lot of other features, everything from payroll tax items to normal tax items to benefit plan items. So a lot of that is going to depend on industry, the nature of your business kind of coming in, but the ones that are probably getting the most attention are the SBA pieces of it, the economic injury disaster loans and the Paycheck Protection Program loans.
We'll go into a little more detail on the terms of some of the specific loans, but are there any grants available in addition to that?
There are, and I'd say those are really kind of 2. So one set of grants are tied to the economic injury disaster loans. So basically, small businesses that make those are potentially eligible up to a $10,000 sort of advance or grant related to the economic disaster loans. There are also other provisions in there for lack of a better term, potential partners of the SBA. So to be able to get grants and for different types of institutions, different types of medical institutions, minority-owned business groups, women-owned business type groups. So there are multiple sections that deal with grants, but the one I think this question probably refers to are the $10,000 grants available under the economic disaster loan piece of the legislation for businesses directly.
Thanks. So the CARES Act has some far-reaching impacts on employee benefit plans, affecting qualified retirement plans and health plans. Could you summarize those?
Sure. More familiar on the retirement side than the benefits. Given the breadth of the program, it's hard to be an expert in any one. So I will say there are a lot of people doing good programs kind of within a more narrow range of expertise. But on the retirement plan side, a few of the things they've done that are important that I'm sure employees may be asking employers about. One is loan amounts against 401ks and things like that. Historically, were capped at $50,000. That dollar limit's been increased to $100,000. For new loans. In addition, there's some adjustments on current loans that may be outstanding. In addition, people can take withdrawals. Hardship withdrawal rules have been expanded. So again, $100,000 limitation, but essentially they're waiving the 10% early withdrawal penalties. You have the chance to potentially put the money back in over a 3-year period, and the taxes that are normally due, because normally that gets added to income, can also be spread over a 3-year period. And current withholdings of taxes aren't required. So quite a number, basically they're trying to give people access to assets they may have from a liquidity standpoint. Normally this is the type of thing that employers don't encourage, but given the situation, they realize employees and people may need access to funds that are built up in retirement plans. So pretty broad expansion in the hardship rules, in the loan rules, for participants or people who have eligible retirement funds. There is some stuff, and I'm certainly not an expert in this area, related to the family medical leave provisions as well. So employers obviously will have to get up to speed on that, but probably better talking to your benefits providers about those specific provisions.
So this next one I'd like to spend quite a bit of time on, and that is the highlights of the Paycheck Protection Program and then the aforementioned economic injury disaster loans. What are those specifics and how can a business owner apply for these loans?
Sure. Let me touch on that second part of that question first, because I think it's pretty important to kind of understand the different mechanics of getting to these programs. So the economic injury disaster loans basically are directly made through the SBA. So basically SBA.gov. So you would be interacting directly with the federal agency for the FEMA areas for the time periods covered. Whereas the paycheck protection loans are going to go through existing SBA lenders or banks. Obviously, there's some banks that already have been active SBA members and participants, so preferred lenders. And the advantage that preferred lenders kind of have is already having been interacting with the SBA on other types of loans, they can actually almost straight through process. So they can, once they have all the documentation, they've already been approved by the SBA, they can sign the loan and issue the loan pretty much electronically on the spot. So probably a little bit quicker, where some other banks may still be, and I would expect the SBA to endorse other banks as well, but who aren't in the program or haven't been as active in the program. But right now, I'd say SBA preferred lenders probably are a little faster path than newer banks or banks that hadn't been active in the SBA program. So the Paycheck Protection Program loans will go through your existing banks. Some of the different features on the loan, let me kind of touch about these. The economic disaster, injury disaster loans or EIDL loans, these traditionally do require collateral, so real estate when it's available, but they won't be declined for lack of collateral. But if you have collateral, they do expect it to be pledged, or pledged to the extent that it's available. So it's not a requirement of the loan, but if you have it, it will be attached to the loan. The other issue, on the paycheck protection loans, sorry, I'm trying to get all my different notes here. Again, it's quite a bit on the paycheck. But basically, first is how much can you borrow? That's designed to the borrowing sort of capacity is 2.5 times average monthly payroll for the 12 months prior to the loan application. But if you didn't have 12 months, so say you're a business and you didn't have 12 operating months prior to the loan, then they are allowing, say, January and February, the period immediately preceding to then be used to establish that. In addition, they do allow the inclusion of rent, utilities, and interest on prior debt. And I believe the cutoff on that is February 15th. So again, if you can kind of establish it's both payroll, interest on prior debt, rent, and utilities, and more or less 2.5 times that number is some of it. It's designed to help you cover 8 weeks of payroll, interest, rent, and utilities, so basically about a 2-month period. And forgiveness can't be more than the face value of the note. So there is a forgiveness feature on that portion, basically that 8-week portion.
Can a business apply for both the EIDL loan and the Paycheck Protection Program?
Bob, I know it does on the paycheck side. I assume it does on the other, but I haven't read that specifically, so I don't want to commit myself to that.
My understanding is, my understanding you can, but but then the EIDL loan gets subtracted from whatever you would get from the Paycheck Protection Program.
Okay.
Another question, can independent contractors apply for the Paycheck Protection?
They can. That was one of the expansions. Again, if you can substantiate, the earnings history and documentation. So I would spend some time on those documentation sort of issues, which I believe you're sharing with the group, Bob. But yes, Independent contractors can qualify, but you do need to be able to document and evidence the history.
And my understanding is if a company employs an independent contractor, 1099, it's the independent contractor that applies for the loan, not the company.
Correct. That's my understanding as well. And let me maybe touch on something else, because this will touch independent contractors. There are income limitations on that payroll calculation. So basically, up to $100,000 in payroll per employee is covered. But so if you're a contractor and you're at $200,000, you're not going to get coverage for $200,000. You'd only get coverage up to the $100,000 sort of limitation. And that applies as well for businesses that are applying, right? So it's based on the total availability is based on that payroll, but it's up to $100,000 per full-time FTE, full-time position. Now, let me kind of touch on one thing, because a lot of businesses have already either laid off or furloughed employees. You can, again, it's based on that prior look back. So if you had 20 in the period, right, and you have 10 employees now, right, you can still get the loan off the 20, but it's designed to help you bring back the 10 you might have laid off or furloughed in the interim, right? So just kind of keep those features in mind a little bit if you've already taken action.
And actually, that segues right into our next question. We discussed the changes in unemployment insurance and how these might affect the way an employer looks at hiring for the future.
Yeah, so the federal program puts a $600 per week addition on unemployment. Obviously, unemployment's traditionally a state-driven. Kind of the amounts are driven by state levels. The federal program adds basically $600 per week through July of this year. So that's an addition of $600 per week to the unemployment issues.
And contractors can qualify for those benefits?
Yes, they can. Again, they'll need to document and substantiate and evidence, right?
Right. So what do business owners need to know about the new leave provisions?
This is where, I'm certainly not an expert on the leave provisions. You probably know this area less well. So employers can, exceed the monetary limits, set forth under paid leave provisions. Rehired employees are eligible for paid leave under the FMLA. Reimbursement, some of this gets into federal contracting stuff, which I don't have personal experience with. Maybe you can speak more to federal contracting sort of things. And there's tax credit advances for paid sick and paid FMLA leave kind of added into the act as well.
Okay. So what are the liquidity measures on the tax side?
On the tax side, some of the bigger ones. So one, if you're a tax-paying business now, you have the ability to defer those tax payments have been deferred, and then payroll taxes as well can be deferred. Now, it's not my favorite liquidity provision because deferrals certainly aren't eliminations, and so obviously the operation of the business in the interim. So it's not my favorite provision, but it is in there. Essentially, you can defer 50% of payroll taxes for 1 year and the other 50 for a 2-year period. So businesses do have the ability to defer the employer portion of payroll tax contributions, 50% for 1 year and 50% for 2 years.
Okay. So the CARES Act contains an extensive number of provisions specific to certain industries, in particular the healthcare industry. That would require another webinar to really do it service, but could you at least summarize them?
Yeah, some of it is both what are items needed for the current situation, but also ultimately, as we spoke about, Bob, the other day, is kind of acceleration of existing trends. So you see a lot in there related to accessing healthcare, remotely. So teledoc related issues, rural broadband related issues that would be necessary to facilitate teledoc. Obviously, this began in animals, so you have zoologic information in there. Obviously, sort of the expansion of testing issues are in there. Other awards for health centers kind of in there. But you do see a lot related to telehealth and waivers of other kind of requirements. So, for example, dialysis patients having to see doctors in person. Some of those requirements of other programs have been relaxed in the act. But in a nutshell, when you really kind of cut through it, everyone knew teledoc health and rural access, but you do see a pretty broad expansion of concepts of rural broadband and teledoc health and trying to build that infrastructure out, not just for this current crisis, but going down the road as well. And sort of expansion of, for lack of a term, in-home health, right? Versus sort of more aggregated health, trying to enhance capacity by treating people more where they are rather than centrally, right? And kind of trying to keep the central things for more critical care type issues.
So the whole area of resources, how can a business owner decipher what the best offerings are for them, and what's the best source of getting that information, and are there resources available to help companies to fill out these applications?
So I would definitely on the loan side, interacting with preferred SBA lenders. I mean, they're going to be the most knowledgeable on the programs, probably getting information through internal calls and have trained staff to deal with it. So, preferred SBA lenders on the tax issues, obviously existing, accounting relationships. If you decide to do the payroll and other types of tax deferrals. On the benefit side, obviously your benefit providers. On your retirement plan side, I mean, you're really going to need to engage just about every vendor you have. There's some feature in the law, and even down to your regulatory bodies. We are seeing a lot of waivers on, again, this depends by industry, but we're seeing a lot of waivers from the FDA. We've seen them for obviously distilleries to make hand sanitizers, waivers of excise taxes and things like that. So I'd say really now more than ever, just about every vendor across every aspect of your business, you probably need to just have them on the call list and work each piece of it, because it is very, very broad-based legislation. I mean, they're trying to pull any lever that a business might have. So, and obviously your specialists are going to be a little bit deeper down each of these verticals.
And again, I would bring to the participants' attention the resources on our COVID-19 site. How important is it to apply quickly? Is this going to be first come until the funds run out?
Yeah, I mean, they've tried to do, I'll say, I would suspect, people are worried about the funds doing out, but they did a pretty good job on the math, right? I mean, $350 billion basically covers every small business as they defined it in the act up to 8 weeks of the payroll sort of items, right? So they did a really, I give them some credit on this one. They did a really good job on the math. To put that in perspective, that is, every qualifying business, 8 weeks of payroll across the country. Now, the question, Bob, which we kind of spoke about a little bit, or venture-backed companies or the affiliated rules, right? There's some question marks on those businesses, whether they're kind of defined in there. And then I suspect, given the nature of this, that if they need to expand the program, I mean, this is kind of like the Opportunity Zone legislation. This went through with no votes. So I think they're going to, for lack of a better term, print the money that's necessary. But I think they did a pretty good job on the math, in terms of, likely not running out, right? And they have pretty good payroll tax data and things like that. So they didn't just willy-nilly come up with the number.
Why don't you go a little more detail on what you just referred to regarding the affiliate rules for venture-backed companies? As a matter of fact, I saw a letter sent today from Speaker Pelosi to Secretary Mnuchin and the director of the SBA raising concern about this issue.
Yeah, so normally businesses, control groups or affiliated groups and kind of the definition of those. So imagine a private equity firm that has 10 businesses, right? Because of the common control and common ownership, any individual business, if it were a standalone operation, would qualify, but the collection of them don't qualify, right? What we've seen in that regard is they very quickly addressed it for hotel companies and restaurants, right? To basically said each location will be treated as an individual business. So if you're a McDonald's franchise guy and you have 100 locations, you will be treated as if you're 100 separate businesses, not one business with 100 locations, right? From an employment. So we've seen some relaxation of that for hotels and restaurants specifically. I do think there is a hesitation to be perceived as bailing out Wall Street. And so professional venture-backed and private equity-backed firms obviously fall in that category. And I don't think they want to be perceived as that. They do have the ability to also make case-by-case exceptions. So I wouldn't expect a broad-based ruling on that. I could be wrong based on what they did for hotels and restaurants. But I generally think the expectation is that private equity and professional VC should circle their own wagons here a little bit. But we have seen some relaxation in those affiliation rules, so I could very well be wrong in that determination. And SBA lenders do have the ability to petition the SBA to make a ruling on a case-by-case basis.
Well, if we learned anything as a follow-on to Speaker Pelosi's letter in terms of progress along those lines, we will send that information out to our client companies. Mm-hmm. In addition to legislation, there have been and will continue to be substantial regulatory changes to address this crisis. Could you highlight some of those?
Sure. Just, starting with the banking, we've seen the reserve requirements got relaxed to basically add lending capacity for banks. The Federal Reserve obviously is buying securities, trying to support credit spreads in the marketplace because interest rates for private companies actually went skyrocketing up in here, not down, due to the work stoppages and the cutting off of cash flows. Obviously, the FDA is very active, as well as other regulations related to manufacturing and switch over type issues. So we're really seeing it across a broad range of regulators, for lack of a better term, a tearing down, if you will, of a certain number. I wouldn't say a complete tearing down, but certainly a deferral of a lot of regulatory items. Extension of tax deadlines by the IRS, obviously trying to allow people to hang on to liquidity during this period. And I think right now, it's clear they think this is a 2-month sort of event, not a 6-month type of event. I think that's the part that everybody is still waiting to see. Did they do enough? Is it in fact a 2-month type of event, or is this going to turn into something much more substantial, kind of related to flattening the curve and the decisions that they have to make?
Okay, so we have a wide variety of questions that have come in throughout the discussion. So we open up for those at this time. So what are the loan limits and rates?
Yes. Yeah. So loan limits, again, it's a formula. So it's 2.5 times your average monthly payroll, interest on debt prior to February 15th, rent and utilities. So, and it's 2.5 times that number on a trailing 12 basis for the 12 months prior to the loan application. And the rates are somewhat the top rate would be 4%. It can be tied to credit score, so there is potentially it could be slightly lower, but the cap on them is going to be 4%. And a couple of other features that I think are pretty critical to touch on. The government does realize these are, for lack of a term, high-risk loans. So they are subordinated in that they don't, other than the IDLs, which we kind of talked about, that collateral piece, right? These aren't requiring collateral, and they're not requiring personal guarantees, which basically makes them subordinated to existing debt that you might otherwise have. So one of the questions I think that some businesses may have, if you have existing credit facilities with a bank, right, would this essentially blow through your covenants in terms of indebtedness? No, I actually think because of the subordination, right, to the banks are going to actually view this quite favorably.
This one's interesting. My business is an LLC. My partner and I are member managers, and as such, receive one and not a W-2. We pay ourselves a regular guaranteed payment. Are we treated like regular employees?
I assume by regular payment, they're showing it on a W-2. So again, short answer is yes. Owners can be included in that payroll calculation with the limitation of salary up to 100,000. So if they're paying themselves 150, the 50 the additional 50 wouldn't qualify. But yes, owner comp, it can be included in the calculation.
Okay. And to clarify, we can get, as a business, we can get payroll forgiveness for 1099 contractors, but the contractors have to apply for it, not the business?
That's my understanding. Yes.
So as an independent contractor can apply for payroll protection via CARES Act up to $100,000 a year plus apply for unemployment?
In essence, can you do both? That's a good, I don't know the answer to that, Bob. I don't know if you've read anything on that, but I don't know the answer between the unemployment and the CARES Act provision, how those two would interact for a 1099 person.
Okay. We'll take note of that and post that on our website and answer to that. A specific question on the economic injury disaster loans. I applied yesterday to the COVID release at .sba.gov website, and on the second to last page, it required that I certify, quote, under penalty of perjury under the law of the United States, that any of the proceeds for the EIDL or grant only be used to provide secular social services to the general public. Yes, I read that correctly. The application will not allow you to submit unless you check the box. I went back on the application website to make sure I had not selected a nonprofit or other option that would make that statement come up. I also tried a different browser as well. Most small businesses do not provide secular social services to the general public. Why are all the proceeds from this type of relief required to be used for secular social services?
Right. So maybe I can help a little bit how they're viewing this, or at least my understanding is, right? So I actually wrote some of this down. Let me find it here. Apologize. So basically at this point, they're viewing keeping people employed to a degree. So some of this is under, existing SBA stuff versus setting up new websites and new things. But essentially what they're saying is a social service to keep people employed at this point in time, all right, and specifically American personnel. So they basically view it, make a significant contribution to the U.S. economy through payment of taxes, use of American products, materials, or labor, right? So I don't think they mean in that question sort of a social service in the sense of welfare for, say, homelessness or something like that, right? They basically they see it as a social service to keep the American workforce employed right now, basically is how I view that question.
Okay. Interesting. When will gig/self-employed employees be able to apply for unemployment in South Carolina? SCDW's website says to keep checking back if someone is not already filing weekly claims. That may be beyond your.
Yeah, I haven't looked specifically into South Carolina. Y'all might have a better sense of what's going on there in Columbia than I do.
I'm afraid I can't help there either.
Yep.
If someone who's on the line has some insight into that, feel free to answer via the question would be actually an answer. Next question, the PPP loan asks for average monthly payroll to calculate the amount that will be accrued, but use proceeds can be for mortgage, interest, rent, etc. Should those things be added to the quote average monthly payroll?
Yes, correct. Yes, correct.
You touched on this somewhat, but do private equity held companies qualify for the CARES Act monies? If your understanding is no, my advice, any advice where how to appeal, I think we basically touched on this already. Current understanding is a waiver has been provided for the hospitality industry, as you mentioned.
Yeah, so again, private equity, my initial inclination is, hotels, restaurants already kind of exempted from those Control Act issues. Other types of companies, no, right? But you potentially could go through an application and get a case-by-case waiver, is my understanding at the moment.
Yeah. Where specifically can we find grant information for women-owned business?
Those have to do with some of the, for lack of a term, incubators and other things. And Bob, I don't know if what South Carolina has. I know there's some in Columbia, but y'all might have more information on those agencies, which basically qualify to get additional grants to help those types of businesses specifically. But I don't know where the existing list of that is for, say, South Carolina and our region might be. But y'all might have more resources there that identify those groups.
That will be something else we will put on our website, is that list. What can we expect for approval times, disbursement times for PPP and EIDL?
That's kind of the question on everybody's mind. Talking with the banks, they're hoping to, the ones who are active SBA lenders, most of them are this week hoping to have their online portals set up. If you have your information and your documentation, approval, again, with SBA sort of preferred guys can be very quick. With the EIDL, this is part of why they're doing the $10,000 sort of grant to, in essence, on an attestation. Right, it's almost a signature loan for the $10,000. Beyond that, right, there's going to be a process. But your SBA approved lenders, if you have your documentation, can almost get it done. I don't want to say on the spot, but obviously you're better served if you have a relationship. They're sort of geared up to be able to make fast credit decision, but it is going to depend on your ability to produce documentation.
And what would common decline reasons be?
Common decline reasons are going to be you're not going to be able to substantiate your, say, payroll information, right? So you don't have your payroll registers. You don't have if you on your rent side, if you don't get an invoice, you need to have a copy of your lease. That substantiates that this is an amount that you've been paying, right? So your failure to document or evidence the actual payments that you've been making, would slow you down.
If the business is currently closed, does that impact the outcome?
I'm sorry, I missed that, Bob.
If the business is currently closed, does that impact the outcome?
Not well. By close, you mean it's been shut down? No, my understanding is it wouldn't. Right? I mean, there's an assumption that you're going to come back into to business. Again, they're looking at a trailing. So the idea is to provide relief to help these businesses weather this 8-week period and get back into operation, right? But it is a loan. There are some forgiveness features, but if you never come back into business, right, I mean, you could potentially still have obligations and items like that because you have to be able to operate in order to earn the forgiveness period.
Next is, we need contact information for banks. Neither of the two banks I do business with are available because they are closed.
Yeah.
That's your answer, huh?
No, well, I can't, most banks are still, I think kind of functioning in these SBA guys, right? They might be closed in branch. So anything that is, physical or in person, right? Most of them have closed their branches, but they should still have their, calls and their business continuity plans in operation, and their SBA groups are still kind of operational, right? Or should be, right? With phones. So most banks I know from a lending side are open. They are working remotely, but they have definitely closed their physical locations.
My startup is pre-revenue. I originally paid myself a salary through my startup, but stopped to prioritize paying vendors. I had alternative sources of income through part-time consulting work, which have now disappeared. I'm interested in applying for the CARES Act loan to pay myself payroll plus my third-party invoices. Will that be possible if I haven't paid myself in some time?
Third-party invoices. So again, the payroll, again, owners do qualify, right? So income, that's a little bit of, there were multiple parts to that question, right? Because some of it sounds like there is some income from other sources, but then some of it essentially was equity funding, so it's not showing up as a payroll item. And it sounds like maybe they haven't taken a check in a bit. And again, it's kind of that 12-month period before. So I would say, yes, there's potentially some, but in terms of, and then I understand maybe some invoices that are outstanding, that kind of being different than the paycheck, provision type items. But that's a little bit of a layered question. So the short answer is yes, some of it probably does qualify, some of it doesn't. That sounds like one where you definitely need to be interacting with the lender to go through kind of what all would qualify and what's not going to qualify.
Do you know of any banks that have their PPP loan applications ready?
I know United Community Bank said theirs would be ready Friday of this week is kind of their intention. I've not heard, Wells Fargo obviously is a big SBA lender in our state. I don't know what their status kind of is. I know County Bank has a pretty active, Live Oak Bank is another one that is very active in the SBA program kind of currently. I would check them. Independence Bank, trying to think some of the other, BB&T has a very active SBA program. I would check their websites. Bank of Travelers Rest, Synovus Bank. I think Business Development Corp out of Columbia, right? So, but Bob, maybe I can give you some links for your website and stuff for the ones that we know are already in the program, and I'm sure they'll be adding others, but those are the ones that come to top of the mind off the top of my head.
Very good. My understanding is they're going to begin processing business applications this Friday and independent contractor applications next Friday. We are developing a COVID testing swab and need working capital. Any COVID solution-directed programs at federal or South Carolina level?
The short answer is I do know potentially some groups that Bob may be directed through you. The short answer is yes. I do believe there's money out there for those types of things. But that's probably a question for offline, getting into specific names and connections.
If you are, and I see this person is, if you are an SC Launch or SC Ventures related or SC Innovations related company, please reach out to your individual point of contact within SCRA to discuss any potential funding through us. Does your business have to be classified as, quote, non-essential business to qualify for access to the loan program?
No, no. So they're kind of following the FEMA program. I don't know if other people got the FEMA letters in the mail, right? But basically, South Carolina, the entirety of South Carolina, I know, and I don't know if people might have locations other places, but it's basically following the FEMA declaration, right? It's not based on the essential, non-essential aspects.
What if your payroll and rent/utilities as part of a business plan increased significantly in January 2020 compared to the average over 2019?
You know, my understanding is it's the 12 months prior. You could potentially work with your lender again if that's the case. That, you know, for businesses that don't have a full 2019, I know they were going to allow people taking January and February for purposes of the calculation. Whether they allow you to shift it just because you had a change in operation, I don't know. That's a very specific question that I would probably better handled by your actual loan officer on that question.
Yeah. I'm not sure you have answered this, but what's the term of the loan under the PPP?
So basically, these are going to be 10-year type loans, you know, at 4% with some forgiveness embedded in them, right?
Okay. The PPP application section for calculating the loan amount doesn't seem to be asking us to include rent utilities in the amount. It only says, quote, average monthly payroll.
Yeah.
Are we to assume to add rent, etc.? I understand the loan is, quote, forgivable if you hire back all employees. If you're an LLC and pay your, okay, that's another question. So let me park that. Let's have you answer the first one first.
Yeah, so I haven't actually gone through an app myself, so I don't kind of know what they're, they're kind of focused on the payroll, but it does broaden out to include interest on prior debt, prior to 15th rent and utilities. So, you know, I would say you'd be okay adding those amounts in if you know them and can substantiate them.
Okay. And then here's a variation on a previous question we got. Are we to assume, I understand that the loan is forgivable if you hire back all employees. If you're an LLC and pay yourself guaranteed payments, is this forgivable since you did not, quote, lay off the employee yourself?
Yeah, so again, remember, owner's comp is kind of included in that, and that was one of the broadening of it. And then on the forgiveness, remember, it is for up to 8 weeks, right, is the way this thing's designed. So it's not, I think that may be one of the sort of misconception. It's not a, complete sort of forgiveness. It's kind of the amount that's going to go to cover this 8 weeks of cost, right, associated with it. So I've just kind of keep that in mind, right, because you could potentially borrow, more money, right, than you're going to wind up spending for the, kind of 8 weeks of payroll, rent, interest, and utilities, right? So just kind of keep that in mind, because you could potentially have a loan that's for a different amount than what you actually wind up, spending on those items for the 8-week period. So, I don't think that's coming through as clearly in some of the things that I'm reading. I mean, I think there's sort of a misperception that it's a blanket, broad-based sort of forgiveness, right? But it's designed to help for an 8-week sort of period, and the idea that you're going to bring these people back, right? But if you don't bring people back and you wind up taking more, right, there's sort of a mismatch there.
The application has an entry for 2x for payroll. Does that include payroll taxes?
That's a good question. I hadn't really thought through the mechanics of that, and I have not heard an answer to that. I would assume it does, but this gets a little bit to that deferral of the payroll taxes kind of question. That's where you have to get a little bit deeper, and I haven't seen clarification on that, so I don't hesitate to answer that question.
Okay. So on Friday morning, what do you suggest the immediate steps we take?
Immediate steps would certainly, have your documentation ready so that you can, either contact an SBA lender if you don't have an existing relationship and have all the information that they're going to ask, and have it in a secure file, so it can be delivered, and start working on your, loan applications. From the lending side, right? As well as if you're going to leverage some of these other benefits, for example, the deferrals, right? You'd want to be in touch with accountants or people helping you on the tax items, because again, it's not that those go away. You're just deferring a liability. So you got to think through that long and hard, depending on how quickly will your business come back, and customers come back and items like that. So that one I think requires a little bit more thought. If you have employees and you're going to sort of expand, you may wind up getting employee questions related to their benefits. So you'll want to know how you're going to handle probably an increased volume of hardship questions and inquiries, and plan document changes, things like that. So I'd say you probably need to be ready to work down the list, with all your vendors, lenders, accountants, benefit providers, et cetera. And documentation, I will say, I can't say it enough, is going to be real important here. People hadn't availed themselves of federal programs, so they're trying to make it pretty easy, but, they always have the power of retrospective audits. Obviously some of the money in there is for controls on the back. So if I can say it once, say it many, many times, document, right? So document why, what it was going in, document where the money is coming out. So you've got to keep really clean accounting and invoice records for, the movement of federal dollars. So I just say keep that in the back of your mind as you go forward.
Can the loan amount be used for health insurance premiums?
That's one of those benefits. Maybe you know the answer to that, Bob. I mean, I haven't read as much on the benefits. I believe it can, but I don't want to speak out of turn because I haven't gotten as deep into that piece of it, because that is the one piece even of our business that, I like to rely on the outside vendor to walk me through that issue. But you might have a better sense on that one than I do.
I'm afraid I don't. I want to go on record. So we've gotten a number of questions along the same theme about the EIDL grants. Are they forgivable or not? Is repayment required or not?
On the EIDL loans? So that is a good. I have not seen that specifically. My assumption is that there's a forgiveness portion. I have not seen that specifically. I assume they're going to work kind of like I've seen more on the PPP piece of it than the EIDL loans. I assume they are forgivable, right? I mean, that's my assumption going in, but I honestly, I don't know the specific answer to that question.
Any information on the Express Bridge loan?
Yeah, I mean, basically what I've heard is on that Express, on that $10,000, grant, right, is pretty much going to be an attestation that you've been economically impacted because of the coronavirus, right? So it's pretty much a signature attestation type loan, right? Again, I would just say sort of power of the audit, but they're trying to make that really easy on people.
Okay. We have every variation here. Does the loan amount include interest on equipment leases?
Versus a pledged asset like that. They say interest on existing debt, that certainly is a form of existing debt, but I don't know if that gets carved out. My inclination is yes, but I think you'd want to work through your lender to get a specific on that.
When does the clock start on the 8-week period? Is it, quote, selectable by the small business?
No, they're pretty much, so they're varying dates. I've seen on the programs. So I don't know. I would assume it starts at the time. Again, they're kind of following FEMA. So I think it would follow the FEMA declaration for your area, which I want to say in South Carolina was March 1st. I think kind of begins that 8-week sort of period.
Okay. How long do we have to apply for these programs?
Most of these programs are set to run through the balance of the year.
I did note the PPP application said effective through June 30.
Yeah.
Winding down here, let's see if there are any others. Sorry, I'm seeing if there are others that we hadn't previously covered. Thank you all for your multitude of questions. It looks like most, if not all, have been covered. If you feel that you have a remaining question, feel free to, Alan, I'm going to volunteer your services, but that's why we have our our email addresses at the end here. Feel free to reach out to either of us, and we'll either be able to answer ourselves or get you to the right resource.
Yeah. Oh, I did find a note here. It does include healthcare benefits, paid sick leave in that payroll cost calculation. Someone had asked about the healthcare. Yeah, I did find that in my notes.
Well, Alan, thank you very much for your insight. I know this is multi-attributed and very complex. I know that companies are having to make these decisions very, very rapidly. And so we very much appreciate your insight. And thank you all for participating. Thank you for your questions. And we look forward to working with you to ensure the long-term success of your companies. Have a good day.
All right. Thank you. Bye.